G'day guys, welcome back to Mango Invest. In this video, I want to share the top three highest paying dividend companies within my portfolio that are paying me, more than $10,000 every single year just in dividends alone. So the first one is QYLD, which is a covered call ETF based out of the Nasdaq 100, and essentially all the dividends or all the money that they make, they push that into the form of dividends, which then they distribute out to their shareholders. So they're really just seeking a high income for their shareholders here. So, the product was created in 2013. So it's got a ticker symbol of QYLD. They've got 102 companies within their portfolio, and which we'll see just in a second. The distribution, so they're paying 11.91% dividend yield, all right, which is absolutely huge, and they pay it monthly. Okay, I always like a good monthly paying dividend company. We'll just click the distribution history here. We'll have a look at 2023. The top being January, the bottom being December. So, you're looking at around the 16 cents to 17 cents per share. What I like about this, it remains very, very consistent. Okay, so you don't have one that's paying like 16 cents and then the next one's paying like 30 cents and then back down to 12. It's all very stable of 16 to 17 cents per share, which is what I like. And then in 2024, they've paid their first one of 17 cents here. So, we've just got to wait and see how it looks for 2024, but just keep an eye out on that one. And just a quick basic, look at performance, last 10 years, looking at, around 7-ish% of total return. And that's including the dividends as well. So the stock price doesn't really fluctuate too much. So taking into consideration the amount of dividends that they actually dish out, that's the total return that you'll be looking for. But at least with that dividend, it's getting paid straight into your account, and you can use that cash flow however you want. All right, now looking at the holdings, which is probably the most important thing when choosing an exchange traded fund. The top holdings are companies that I own individually anyway, so I feel very, very safe investing into this ETF when you've got Microsoft and Apple sitting at 9% weighting each within the portfolio. Amazon sitting at 5%. Nvidia. I don't really know Broadcom too well, but you've also got Meta Platforms. You've got the two classes of the Google shares, also with Tesla and Costco. Now, if you were to click the Show All button, you can see all 102 companies, which we won't do, but there's other companies in there such as Coca-Cola, Pepsi, Walgreens, Boots Alliance. So some very well-known and established dividend-paying companies there. And later on, we'll go and show you, how much I'm actually making from this company after we talk about the next company being JEPI, which is a JP Morgan Equity Premium Income ETF, which essentially is the exact same thing as QYLD. So ticker symbol JEPI, JEPI, and they've got a really good dividend yield, of just over 7%. Right, and if we were to look down here at the portfolio stats, you've got 131 companies, which is a lot more than QYLD, but you'll actually notice some of the companies are very similar. So right here, you've got Amazon, Microsoft, Intuit, MasterCard, Visa, Meta, and AbbVie. And, the list goes on. If you were to click all these holdings, you'd also see, Coca-Cola, you'd see Apple. But what's different about JEPI compared to QYLD is that, see the net assets, this is the total weighted within their portfolio. So you saw, Microsoft had a 9% weighting within QYLD. These ones are a little bit more balanced. Okay, so there are a lot more companies with a lot less weighting in each company. So therefore, I feel like it's a lot more balanced. So say, for example, if Amazon was to go completely bankrupt, you're really only losing 1.72% of your total equity within this ETF here. All right, and then scrolling down, this is the sector exposure. So within QYLD, you saw a 52% exposure in tech, whereas this one is only 14.6%. So you can see how this one is a lot more balanced over a lot larger amount of companies here. All right, now let's have a look at the dividend schedule here. So let's have a look at the payment date. So starting out on the 6th, June of 2023, you've got 44 cents per share. And as you can see here, it's a little bit more volatile than what QYLD is. So you've got a low of 29 cents per share and a high of 40 44 cents per share here, but it's really staying in the range of like 30s and 40s, so it's really not too bad. So that's how much you can expect getting paid with JEPI there. And the next one is AGNC, which is not an exchange traded fund like QILD and JEPI. This is its own real estate investment trust based out of the United States. So if we click over to opportunity here, and you can actually click their portfolio and see exactly what they're investing in. So basically, the mortgage that you and I own, 89% or 90% of their portfolio is in mortgage-backed securities, and then of those mortgage-backed securities, they've got 95% in the 30-year fixed loans. You've got, just 1% in the 20-year fixed loans, and then, 1% in anybody with less than 15-year percent loans there. So just your typical real estate investment trust for mortgage-backed securities. All right, so let's have a look at the dividend here. So if we go back all the way to 2020, or even go 2018, you see they're paying 18 cents per share, and then in 2019, the very next year, they went down to 16 cents per share. So you're getting pretty nervous here as they're reducing their dividend. It's not what we want for any sort of company. But then ever since 2020, they've held 12 cents per share. 2021, the same, 12 cents per share. And then 2023 to 24, they've maintained that 12 cents per share. So even though in history they've actually reduced their dividend for the last sort of 3 years, they've remained very stable in paying 12 cents per share, which I feel very comfortable owning. But again, we'll probably just have to wait and see what 2024 has in store for us. And one important thing to understand as a real estate investment trust is, you're always going to get paid a dividend. So here let's read this sentence here. So as a REIT, we are required to distribute annually 90% of our taxable income, and we will generally not be subject to the US federal or state corporate income tax to the extent that we distribute all our annual taxable income to our stockholders on a timely basis. So there you go. You don't really have to be worried about this company not paying a dividend at all. They would have to be literally bankrupt and fail as a business for you not to get a dividend, because all the distributions that they do make, they have to give you 90% or shareholders 90% of their total profits there. Now, moving over to track your dividends. So this is my total portfolio, taking into consideration the equity and the cash. And in total, we've got just under $307,000 USD with a yield on cost of 5.64%. And the total annual income I'm getting is $16,745. So every single month, I'm averaging $1,395 just in dividends alone. Now, first up, AGNC. These are the big ones. I've got just over 3,000 shares at an average cost of $10 or just under $11 per share. So here you can see the dividend yield at the moment, and they're currently paying me $4,448 every single year just in dividends alone. Now, JEPI. All right, so I've got 724 shares at an average price of $55.37. The current dividend yield here is 8.33%, and the annual income is $3,379 there. Now, moving on to the last one, QILD, I've got 1,221 shares at an average price of $17 per share, and the dividend yield is 11.45%. All right, and they're paying me $2,475 just in dividends alone. So just with those three companies, they're paying me $10,000 or more than $10,000 every single year just in dividends. So there you have it. Those are the top three dividend paying companies within the portfolio. If you did like it, please give me a thumbs up and subscribe to the channel. It really helps out. But as always, I'll catch us in the next video.